Hello, and welcome back to another episode of C-Suite Unplugged. I'm your host, Adam Legg, and in this series, I talk to Alberta's top CEOs, entrepreneurs, and business leaders about their journey to the C-Suite, what keeps them up at night, their perspective as a leader in their industry, and their outlook on the future. If you find this episode interesting or insightful, let us know by heading over to Apple Podcasts or Spotify and leaving us a quick review and rating. Now, on to the show. Welcome back to C-Suite Unplugged. Well, it's a tough job raising money for private equity, and sometimes even harder when your focus is the energy sector. But our guest today is not only successful in that, but has amazing insight into high-performing companies and management teams honed through decades of investment analysis. This framework is in many ways a brainchild of BCA's chair and founder, Mac Van Willigen, but as ARC Financial CEO, Brian Boulanger continues to evolve and advance that model. And in the cutthroat world of private equity, he's also one of the nicest people I know. Brian, thanks for being on the podcast.
Yeah, thanks for having me, Adam. Delighted to do this and so happy with the work that BCA does on behalf of the businesses in Alberta.
Well, thank you for that kind endorsement. We do it for you guys. So thanks for your ongoing support. Brian, for our listeners who don't know you yet, can you please introduce yourself and give us the elevator pitch of ARC Financial and the role you play there?
Yeah, absolutely. I mean, I have a pretty simple resume because I spent my whole career at ARC. I was a summer student in the mid-90s between my third and fourth year, and they offered me a full-time job. And I have the good fortune of being the fifth CEO of the business. And so fun fact is I've had the same parking spot my whole career. So pretty simple resume. And one of the things I always like to say to people is as the fifth CEO, I have the good fortune of doing that. But also the fellow that hired me back in the mid-90s, Lachlan Curry, he was an investment analyst at the time. I was his junior analyst. He went on to become the fourth CEO. Prior to that, it was our first employee, was the third, and then before that, the founders. And so this is a business that's definitely been built from succession planning from within. And there's a lot of people like myself that have spent the bulk or almost all of their career here. So it's a really cohesive group that has spent a lot of time together. And in terms of what ARC does, we're Canada's largest private equity firm focused on energy. We've raised a little over $6 billion across 11 funds. And we're committed to building businesses in the Canadian energy sector. You know, we fancy ourselves investors, but we also say we're company builders. And so that commitment means building high-performing businesses that in our minds can help address the world's energy and sustainability needs. And so starting companies, helping them grow, and then eventually looking to sell them on to a larger company so that they can continue to grow those assets.
Yeah, and some of the companies that you've invested in over time have just become some of Canada's most significant players in the energy sector. I think of many of the companies that Mike Rose has led in his career, for example, and many, many others. We'll delve into your secret sauce for leadership and management teams in a minute, but a little bit more about you, Brian, in terms of share with us your leadership philosophy. You and I chatted many times throughout the pandemic about the inflows in and out and what leadership looked like in and out of a pandemic, but what's your leadership philosophy today, and has it changed or evolved over the years as you parked in that parking spot for the first time to when you got out of the car this morning? How has it evolved at all, if it has?
Well, yeah, undoubtedly it has evolved, and I mean I've just matured, I've aged, I've learned a lot. As I said before, we've got a very stable organization here. So I have the good fortune of working with my partners for a long period of time, and we're friends and we're colleagues and we're partners. And so my leadership style has evolved in a way that I've recognized now how important it is to surround myself with talented people. I definitely would subscribe to the view that you should play to your strengths and solve your weaknesses by surrounding you with people that can help you in that area, as opposed to trying to improve on your weaknesses. You'll fix that by having good people in the right seats around you. And in terms of leadership, my personal style is to make sure that we've got the right structure, the right processes in place, and the right people on the files, and then generally get out of the way. Because I know I'm surrounded by fabulous people with a lot of talent. Best just to make sure that we're honoring all the processes that we've developed over the 30 plus years that we've been in business, and making sure there's a lot of rigor around decisions. But for the most part, get out of the way and let the people at the front of the file or the front of the decision make that decision and support them in whatever way I can once we've made that decision. The other thing that I was reflecting on the question a little bit in advance, I have come to learn, if I could say it humbly, I suppose, authenticity and vulnerability goes a long way in leadership. If you're willing to do it, quite frankly, it's easy and it builds relationships and makes it, quite frankly, a lot easier. And then finally, I think leadership just takes time. You have to set aside the time to spend time with your people and the key relationships and your key stakeholders. And without that investment of time, it's not going to happen. So you have to be fairly intentional with your leadership, I think.
Yeah. Yeah. That's well said. Intentional leadership is a way not only to build a way to lead and a culture, but also to reinforce it and sustain it. You have a strong corporate culture at ARC, and as you say, it's been built, sounds like, from very much day one with the founders. And have you seen culture shift either at ARC or in any of your investment companies over the past few years? We know the pandemic has shifted a lot of the work from home and hybrid, and lots of debates about where people should be working. And I think one of the things that's difficult to manage at a distance and remotely is a sense of deep-rooted culture and collaboration per se. But what have you seen as you operate and lead ARC, as you invest in many companies and try and enable them to be their highest performing selves?
Yeah, I think it has morphed, and I mentioned that with this, I am the fifth CEO, and each CEO brings their own style and their own personality, I guess, to the culture. And I'm going to contradict myself here a little bit, but I think it's a bit more of a relaxed culture now than maybe it was back when I started. And I try to bring a lot of levity to the situation at times, and we're trying to have a lot of fun. At the same time, it does require a level of sophistication and a level of commitment, and quite frankly, just you have to be serious because the business is gotten more complicated. Would argue the business, and I'm talking about the energy business, has gotten harder. There's so much analysis and depth of information that you can dive into now that you have to have a commitment as a team and as a culture to bring that high level of rigor and sophistication and the depth of the analysis. So that's something, while we have fun and we're a bit more relaxed, we have a commitment to going deep and really diving into the details and not shying away. So we operate in a way that demands sort of a level of rigor and a level of attention that I think is maybe new. And there's just so much information to analyze and look at that it does take more just work, I think, to get to the right decisions. The other thing that I've done that I am proud of is I think I've created a more inclusive culture. Really tried to bring the group into the conversation and the decision making. And I have a saying that the more people looking at the same problem will probably come up with a better answer. And so the more people you can engage, and you have to be careful with that a little bit. It can't be all the time on everything, but I have tried to be more inclusive and bringing more people into the decision making process as opposed to sort of centralizing it.
That's a great testament to your leadership, Brian. What do you do for fun? What do you do outside of work to help keep you grounded?
I love sports. I love watching sports with my family. I love playing sports, play squash, I play golf. I like spending time with my family, and when afforded the opportunity, I enjoy traveling. And when I'm traveling for work, I try to take a day or so on each side or one of the sides to tour around a little bit. I love walking tours. If anyone needs some good tips and tricks on how to find the best walking tours all over Europe and North America, I've got lots of suggestions. So I do enjoy travel as well.
I'll maybe come to you offline here on some good walking tours. I love a good walking tour myself as well. Brian, what advice would you have for someone starting their career? They came to you and said, I want to be the sixth or seventh or 10th CEO of ARC Financial. What would you encourage them to do or not do?
Yeah, it's a great question, and I laugh sometimes because I do get asked for career advice, and I love spending time with younger people and trying to answer the question. Although I'm a very curious person to come to for career advice because I've really just had the one career, and so it's all with one background. But my quick observation is, if you can, and not everybody can, but if you can, pick your boss before you pick your company. And I would much rather work for a great person who's going places and who will take you places than for, at maybe a fledgling company, for example, than some hotshot big name company where, your boss is not that kind of person. And if you can align yourself with the right boss, mentor, person that looks out for you as a champion, you're doing the right thing. And the other thing I tell people to keep at least one eye open for when they're career hunting or thinking about their career is, again, and this is if you can, align yourself with an organization that fits your values. And one of my important values is an organization that encourages community involvement and allowing our people to spend time in nonprofits and advancing the community. And so, not every company does that. Not every company encourages that. Often that responsibility is sort of left with the CEO. That's the person that has the time to go do that. And I don't think that's the case. And so if you can find ideally a great company, particularly a great boss, and someone that encourages a bit of balance to your life, including bringing things back to your community, you've probably got a good fit. And if you get all those pieces together, odds are your chances of having a great career and going places is greatly increased.
Yeah, absolutely. Let's switch gears to ARC Financial. On your homepage and your website, ARC Financial uses three words: energy, capital, and partners. And maybe share with us what those three words mean to the company.
Yeah, I mean, we're energy people. We love talking about energy, whether it be electrons or oil or gas. That's what we do. We don't gravitate to deviate from all things energy, and we like to fancy ourselves being 1 or 2 degrees of separation from just about anyone in the Canadian energy scene. And so it's all energy all the time. And the capital, when ARC was formed back in the early days, and I wasn't here for the formation of ARC, but the founders had this vision as to answer the question, I suppose, why are these great, particularly Calgary or Alberta-based companies at the time, why are they having to fly to Toronto or New York to raise capital? Can we bring that capital to Calgary and fund businesses from our backyard? And so that's the capital piece. Bring the capital to where the people are and fund the businesses right here in our backyard. And then partners is how we strive to work both internally and externally. When we invest in a business, we want to feel like it's a partnership with that management team. It's not simply an investment. It's not something that we want to say good luck to or let us know how it turns out. We want to work in partnership. And if we don't feel that that partnership is a two-way sort of commitment, then we're not interested in investing. It's not a business for us. It could very well be a great business and do well, but it's a business for somebody else. So investing in partnership with the management teams is important to us.
That's a great segue to next question, which is that depth and rigor you put to not only the company, its strategy, its management team. Mac has spoken to me many times about the assessments and tools you have to evaluate that, built over years and decades of investment. Do you view that partners aspect, that ability to really invest and assess the management team and their performance and their strategy, is that a unique ARC asset, strategic differentiator for you as an equity partner?
Yeah, I think it's a really important question to consider. I think it would be a bit of a stretch for me to say it's unique. I think there's lots of investors that adopt that sort of trying to understand in a lot of depth the management teams of which they're working in. Having said all that, I would like to think our commitment to that is either unique or call it top decile in terms of its approach. And we have a saying around here that people are predictable. And so if I make 10 calls on Adam to people that you've worked with in the past, and they all say you're a hardworking guy, it's highly unlikely that when you and I get into business together, suddenly you're going to stop working hard. And so, past is a predictor of the future. And our tool in terms of that is primarily reference checks. And that is part of the secret sauce. The fact that given that we are so focused on Canadian energy, and I talked about that 1 or 2 degrees of separation, when we do reference checks on people, I think we can get into the depth and the weeds and the unprovided references and the unvarnished sort of views. So when we're investing in a business on the CEO, we might do up to 20 reference checks, certainly at a minimum 10. And we look to have some of them provided, and we insist that we somehow figure out a way to get some non-provided references, because that's usually where the gold is in terms of the information. And then, we look for many character traits in terms of people, and there's all the usual things like smart, hardworking, the right skill set. But I'd say two things that are, I don't know if it's unique, but some things that we've learned is, one thing is, are they coachable? Like, do they want to continue to do better and learn, and do they have a commitment to learning? And if they're not coachable, then again, it's probably a business for somebody else to get involved with. And then the second question that's an interesting one is, do they know what success looks like? Like, have they been around a success? I mean, there's a lot of people, believe it or not, that are running businesses or working at companies, and they just may not have been around success and observed what a winning team looks like. And when you're on a winning team, you know what it feels like. It feels different. Yep. And not everybody's had that chance. And that doesn't mean that they've all had financial success, but they've had success and they've been around it, and they just know what it looks like and when they have it and when they don't have it. And I'm talking about the ingredients. And that's an important sort of intangible. And so that's something that we look for. It doesn't mean that it's an absolute requirement, but it certainly is a big advantage if somebody's been around success and knows what it feels like to be on a successful team.
You're so true. I mean, isn't it remarkable when you get that moment and there's that esprit de corps, the team is just functioning at such a collective, unified, and high performing level. It just feels so different from those teams where it's a tough slog. I've lived both, and I can tell you it's just remarkable.
Yeah, Yeah, and like, one just practical example isn't that I've seen several times is you might find a CEO that has identified a CFO that they want to work with and they've worked with in the past, and the person might be a great individual and a talented CFO, but they're not an all-star. And then when you kind of get them working with an all-star, and if they haven't seen an all-star before, their eyes kind of open and say, oh, okay, this is what a successful A player looks like in that position. And so not everybody knows what it looks like. And when you identify it for them and you put that person in the seat, there's kind of a big aha moment, like, oh boy, I didn't know what I was missing. And so those kinds of things too, I think can help. And that's where we try to add value. And because we've seen A's, we've seen B's, we've seen C's, we've invested in them all, unfortunately. And so I think we have probably a pretty good lens as to what A's look like versus C's.
Yeah. Brian, I know that the energy landscape is shifting so quickly. What are you at ARC exploring from an investment standpoint? Are there any new markets or segments, technologies, energies that are getting excited or you're exploring or looking at these days?
Yeah, I think it's in terms of my career, I think it's the most fascinating and interesting time to be in energy. I mean, we are redeveloping and reworking and changing our energy system. And that doesn't happen. I mean, that may not ever happen in someone's lifetime. And here we are doing it, and we're doing it at scale. We're doing it across the globe. And so there is so much going on that it just creates opportunity and it creates exciting things to look at. And it requires a tremendous amount of capital to rework an energy system. And so I think that means keeping an eye towards technology, although we don't invest in technology, keeping an eye on policy, because that's about as dynamic as it's been in my career, and looking at a variety of things. I mean, you mentioned energy being a real topic these days. The way I describe it is energy has also become emotional for people in a way that I don't remember it being earlier in my career. Yeah. And to that end, people are taking sides. People are looking at the opportunities very differently, and not everybody believes in all the theses. And so tailoring your investment product for the market is important, because you have to bring forward things that fit with people's mandates and, quite frankly, fit with their particular organization's emotions. And that's just being factored into the decision making now, people's emotions around energy.
Yeah, you're right. There are some different views on the spectrum of what the energy future looks like. There are different views on the time horizon at which we will achieve any of those evolutions or shifts, et cetera. And it's becoming intensely personal, and emotional, which I totally agree, which makes it harder and more challenging to be thoughtful in where to place your bets.
Yeah, I mean, for the first time, we've had to bifurcate our mandates into two separate funds to really satisfy investors' appetites. And, funds 1 through 9 were commingled funds in the sense they had upstream exposure, they had oil field service exposure, and they also had renewables. And going forward, we've separated those mandates into oil and gas and energy transition, and giving investors the choice. Because as I say, not everybody wants both. Some like the opportunity in one and the return characteristics of it, and others are more attracted to the other. And what we're finding is it's few and far between the people that just want both. And it's not what do they want, it's also what can they do. Yep. What do their stakeholders want them to do? So yeah, that's new for us. And if I would have tried to do that previously, our investor base would have not gone for it. But today they understand the need for it, and they're very supportive of it.
Well, that's good to hear. That's good. Let's step back a little bit, talk about the investment landscape more broadly. And so, Brian, what's your 50,000-foot view of capital markets overall right now? What's happening? Where is there pressure? Where is there opportunity? What's the state of the world for capital markets?
I think we almost have to talk by vertical, like energy transition versus fossil fuels, because they're quite different. So maybe let's talk about energy transition first. I think there's a misperception out there that capital is flowing into this sector unabated and in all forms, and across all the different sort of mandates, whether it be early stage, late stage, growth. That is not happening in the way. I mean, there's a lot of investors on the sideline saying, I'm going to watch this for 5 years to see how this plays out. Or I need to spend the next year or two coming up the learning curve to decide where I want to place my bets. And so my observation is, relative to what I think the public thinks is happening, is there's not this just inflow of capital. Now, there is more money globally being invested in energy transition than there is in energy in upstream oil and gas. It has surpassed it, and will well surpass it. it'll be multiples of what's being invested in oil and gas right now based on forecasts. But where the gap is, at least in Canada, that we're seeing it is there's a fairly healthy community of investors that are interested in, call it clean tech, like that early stage venture. All the pensions in Canada are lining up, and their energy transition capital seems to be thrown into their infrastructure groups. And so they're looking for operating contracted assets that are up and running and offering kind of an infrastructure-like risk profile. And where there's a gap, and we're seeing it, we're hearing it from investors, we're hearing it from the management teams, is in that growth part, the heavy lifting to build the assets that are required to deliver the electrons, let's just say. And so that's where there's the gap. And I think governments even recognize that with what they're doing. The Canadian governments recognize that with the Canadian Growth Fund that they've put in place, the $15 billion. And there's just a gap in that marketplace. And so once you build it, there's lots of people that will buy these businesses, but there's not a lot of people that seem to want to fund that part right now, or not as much as we certainly require. And I think those investors that are willing to play in that space are going to get the outsized returns because, as I said, there's a wall of capital that'll buy the asset, and those returns are going to be compressed. But I think the returns for building a EV infrastructure opportunity or a renewable fuels business, I think those returns are still pretty interesting from a private equity landscape. Turning attention to oil and gas, I mean, that what people know and hear is accurate. I mean, that is a sector where the capital has very much pulled back. A lot of investors just can know, in my world, by the way, we deal with endowments, pensions, foundations, and ultra high net worth families. And I would say that the oil and gas sector really has transformed. And for a lot of those endowments, foundations, and pensions, quite frankly, they just, even if they want to, they can't anymore. Their stakeholders have told them no, and they've made that decision. And so we march on. And so, that world is kind of falling into as I raise capital, it's falling into the hands of the ultra high net worth, the people that, maybe have a stakeholder of one. And they can make the decision to carry on with that. And so what you're seeing out of that is true. Valuations are low, and it's a result of less capital. And quite frankly, a view that, everyone's got a different view on the future of the business. How long will the transition take? How long will we require fossil fuels, and how much capital do you want exposed to that? So that's an area where there is less capital for sure.
Yeah. Does that translate into much of Canada's energy or oil and gas resource holdings is increasingly in a smaller and tighter group of, frankly, increasingly more individuals or households or families than compared to, say, larger institutional investors?
Yeah, I just think it's, I don't know how you would find the data, but if you thought there was a 1,000 oil and gas investors 5 years ago, there might be 200 today, kind of thing. And a lot of the same groups that we've done business with for 30 years just can't carry on with oil and gas. And so it is a smaller universe. And so that just means there's less people that are doing it, and therefore there's less capital.
I'm going to come back to a point around that on ESG in a minute, but I wanted to delve more broadly as you go and you do capital raises around the world. Obviously, your sweet spot clearly is in energy, but how do you pick up Canada as being perceived in the global investment community? We really lack a bigger vision for our natural resources. We have had many international leaders come to Canada asking if we can provide our natural resources in their desperate hours of need, and we've sent them home empty-handed. Yet we have been dumping truckloads of money on attracting battery manufacturing facilities to the country. How do people talk about Canada as a destination for investment when you're doing your raise tours?
I think the reality is people think of Canada as being a little bit more risky, and it's got a risk premium that causes certain things to be true. Canadian companies trade at a discount to American companies. Canadian assets sell at a discount to American companies. There's just less capital up in Canada chasing opportunities. So then you ask yourself, okay, why would anybody invest in that framework? Well, because there's a risk premium, there's less competition. We analyze this data all the time, and you look at south of the border into the U.S. and in terms of private equity capital. I mean, first of all, the industry south of the border is, call it, depending on how you measure it from a production or reserves point of view, call it 3 to 5 times the size of Canada. Yet there's probably 20 times as much capital in the U.S. chasing opportunities as there is in Canada. Oh, wow. And so if you can wrap your head around the risks and you can find yourself aligning yourselves with an investor that knows how to navigate those risks, then investors get excited because the entry prices are lower, the returns look higher, and quite frankly, there's just less competition. So you can play on you can get access to the better opportunities because you're competing in a different way.
Mm-hmm.
So it's kind of a good news, bad news point of view.
Yeah.
From that point of view. But you have to be comfortable that you can navigate those risks, because I think there's more of them in Canada at this moment.
Yeah. Does that perception of risk apply to both the oil and gas aspects of investment and some of the more transition, renewable, clean tech side of things? Is it a blanket increased risk profile for Canada, or does it depend on which segment of energy you're looking at?
Yeah, while we're on this topic, I do want to make the point that, and I try to remind investors that this type of risk that we're talking about, which is arguably policy risk, it's very point in time, right? And so it evolves, and it'll evolve over the investment life cycle. And so monitoring and understanding and getting exposure to it over time and being aware of it. So what I'm talking about is a particular point in time, and that can change, and it can change quickly. I'd say I don't think you can make it like a universal truth that the US or Canada, one is better than the other. And again, I'm talking about it from a policy point of view. I mean, certainly what the US put in place with the IRA is a massive stimulus package, and it is creating opportunity. And quite frankly, we have backed good Canadian companies that are doing business in the US because that's the better place to do business. Yet at the same time, there are policies here in Canada that are advantaged over the US. And so it's hard to say a blanket statement which one's better from a transition point of view. The answer is it kind of depends. And that's some of the work that our research team does in terms of understanding and trying to influence policy. And as an investment team, we rely on all that work to help us drive our strategy.
Yeah. Coming back to something you were alluding to earlier in terms of the investability of or appetite for investment by a number of the different institutional investors, the ESG issue. The pendulum seems to be swinging back from some of the more extreme ends of where it has been. But what's your take? Where is the ESG movement right now? Where do you see its trajectory, and what are you thinking about in terms of implications for firms like ARC?
Yeah, I hear the same things that you just said, that the pendulum's swinging back, but I actually hear that more from my friends that run public oil and gas companies. And so I don't know if it's in the public space that you're seeing more of a swing. I'd say in the private capital, like with the endowments and the foundations and the pensions, their commitment to ESG has not wavered. And so, it's been pretty consistent. I mean, given our investor base and the kinds of groups that I just described, ESG has been important to them for a long time too. And it's been important to them, I think, for longer than the public markets. And so maybe what the public markets are seeing is this was new 5 years ago, and it's less new now. So it feels like the pendulum's swinging just because it's less new. But, in our world, we've been at and talking about our commitment to ESG for 15 years. And we've got a timeline that we take investors through of all the different things that we've accomplished over those 15 years. And I want to say it was well over 10 years ago that we made the commitment that at the portfolio level, a barrel of oil produced by ARC will have a carbon intensity below the North American average. And so in a sense, an investment in ARC is helping bring down the average carbon intensity of a barrel. And we have a belief that if you were to dream one day that there will be a last barrel produced, it should be the very best barrel from an ESG point of view. And that's where we want our capital. We don't just want it there because it's the right thing to do. You can make a very logical economic argument that that's a less risky asset to own, because if the best barrel is the last barrel, it'll be a more resilient barrel. And so, when I think about ESG, who wouldn't want to do it? I mean, I just mentioned the attributes from the E point of view, like having a good environmental product is going to make you more resilient. Then you look to the S side, things like your relationships with stakeholders, your safety track record, all those kinds of things. Yes, of course, that's important. And we don't have to talk about governance. That's fairly obvious to everyone. So from our point of view, doing ESG well and having a real commitment to it is easy, because it doesn't guarantee you'll be successful, but you will be building a business that is less fragile and more resilient and hopefully more valuable.
Mm-hmm. I know one of the things that the public sector companies were really having to address was the reporting and the compliance factors that came in with a more broad-based ESG movement. Is that something that you're seeing play out as deeply in the private equity space, or is it a little less, Matt calls it, a compliance tsunami that is being faced by the public companies, and that the private equity firms aren't needing to produce the massive amounts of reporting and demonstration of achievements of their progress?
I don't know that it's very different. I mean, I'd say with some groups, more the family capital, some of them, not all of them, some of them, they're less interested in that. But, for the types of capital that we're managing, they want the data. They're being asked to report on it internally. And, I'm really proud of, quite frankly, it's our research team that helped us go there 15 years ago. And, our research team, their job is to look around corners and identify macro trends. And this was one that they identified long ago, and including the collection of the data. The way we always looked at it was, we were collecting data amongst our portfolio companies and sharing it back with them, data that you couldn't readily get in terms of how you were doing relative to your peers. And there's no better way to motivate a CEO to share with him his data relative to his peers and show him that he's not top quartile. And anybody who is coming in at the fourth quartile level, if you hit them with evidence and you hit them with data, they get motivated to fix that. Mm-hmm. And so, no, we're on to all that. We're talking about scope 1, 2, 3, and even scope 4, and particularly in our energy transition fund, people want to understand that data and they want us to report back. And so, it's table stakes now. You need to do it if you want to be in the game at the institutional level.
Brian, what's your outlook for the next 12 months or so for energy capital markets?
Well, I'll self-declare that I'm an optimist, and I think to be in the energy business a little bit, you have to be an optimist. So yeah, I'm optimistic. I'm quite excited. I mean, 12 months is a pretty narrow window from our frame of mind. Like we sort of talk about next 3 to 5 years. And what I said before, I think if you look at the profitability in the energy business and the opportunity and the growth required, particularly in the energy transition side, boy, there is lots to do. I think there's going to be fortunes made. I think there's going to be fortunes lost as we rework this energy system that I talked about. But you just look at, I mean, I still think globally we're underinvesting in this energy plan. And so if you've got capital and you can put it to work and you can get exposure in a thoughtful way, I think it's going to be a really exciting, I don't know if it's going to be 12 months, but I think it's going to be a very exciting 3 to 5 years.
Yeah. The energy space is evolving so broadly, so rapidly. It's exciting.
Absolutely.
For sure. Final question, Brian, as we wrap here, what's your long-term view for Alberta? Are you excited? Are you concerned? Are we heading in the right direction? What do we need to ensure that we stay on the right path?
Yeah, I think we're doing a great job here in Alberta. I think the people that think about our policies are doing a great job. I think Alberta feels like it's on its front foot. We've got net migration to the province. People are moving here. That's a tremendous sign. There's jobs. There's that entrepreneurial spirit that's back. That kind of got beat out of the system after a tough decade or, tough 15 years. And I really feel that that's back. I'd say Alberta, in my opinion, is maybe approaching it in a more humble way than perhaps we did in previous cycles. And, I think this time we're trying to keep our heads down, work hard, deliver the energy product that this world needs in a thoughtful, safe, reliable, secure way. But I feel like Alberta's on its front foot. And I think it's an exciting time to be an Albertan. And then, I'm very proud to be an Albertan. And I'm delighted to be able to do business in this province.
Well, that's a great note to end on, Brian. Thanks for your leadership, your optimism, your investment in people and companies here in our great province. And it's been a great pleasure chatting with you today. So thanks so much for joining us on the podcast.
Yeah, appreciate it. And keep up the hard work over there at the BCA. You're an important tool for us as well.
Thanks. Thank you for joining us for this episode of C-Suite Unplugged, an Alberta Better podcast series. This podcast is a production of the Business Council of Alberta. You can learn more about us at businesscouncilab.com. We'd love to connect with you on social media, so give us a follow at BizCouncilAB, that's B-I-Z, Council AB, on Twitter, Facebook, and LinkedIn. If you like this episode and want to support our message of shared prosperity for all, please be sure to head over to Apple Podcasts, Spotify, or wherever else you get your podcasts to subscribe, rate the show, and give us a quick review. New episodes drop every other Tuesday. Thanks for listening, and see you next time.